segment, we have three experts from RBI with us. Shri Naveen Kumar is the Director in Gold Policy and Research Division at the Department of External Investments and Operations, DEIO RBI. Mr. Kumar also has experience of working in RBI Chandigarh Regional Office as well as with Department of Economic Affairs, Ministry of Finance. And at present, his research interests include issues pertaining to gold, swaps, and forex reserves. Shri Praveen Kumar, who is working as Deputy General Manager in Department of External Investment and Operation Department of RBI that handles forex reserves of country including gold. Shri Kumar has vast experience in USD INR exchange rate management and its volatility, as well as the monetary policy operations through day-to-day banking system liquidity management operations. We also have Shri Charudatta B. Patil with us. Shri Patil is working as Assistant General Manager in DEIO of RBI. He has handled countries' foreign exchange reserves and gold reserves. He was also involved in the policy making for the gold reserves of the country and was a nodal person for the gold-related discussion with RBI. I now invite Shri Praveen Kumar and Shri Charudatta Patil to the stage to share their perspectives on financialization of gold. Let's please greet them with a round of applause. Thank you.
A very good morning to all. Distinguished speakers, esteemed panelists, learned professors, IGPC, IIMA, ladies and gentlemen. It is a great pleasure for us to talk amidst such a respected and recognized audience on gold-related matters. At the outset, let me clarify that our presentations at the outset, let me please clarify that our presentation, whatever we are presenting, that are the views solely for the speakers and not of Reserve Bank. That is a disclaimer. First of all, myself and my team is trying to emphasize some perspectives regarding the financialization of gold. Before that, let me give a brief intro of the current financial market conditions. The financial markets in India and across the world are witnessing an unprecedented uncertainty in recent times that was not seen in many decades. The current financial setting is completely different and is struggling with a number of simultaneous crises that are not getting over. The COVID-19 pandemic, the resultant lockdowns and supply chains blockage has led to multi-decadal high inflation and an additional crisis, that is Ukraine conflict, has furthered the global commodity shocks and heightened the already elevated inflation globally. With the objective to tame this inflation, central banks across the globe are insisting on aggressive rate hikes that was not seen in at least 4 decades from now. This has slightly confused the market participant, and the safer assets, including gold, has seen an unprecedented volatility in the recent times and is also touching nearing its lifetime high. Now coming to the topic, financialization. What is financialization? As per Epstein, financialization refers to the increasing importance of financial market, financial motives, financial institutions, and financial entities, increasing importance of financial markets, for having financial elites in operation of economy and its governing institution, both at national and international level. It is an economic process by which exchange is facilitated through intermediation of financial institutions. In simple terms, it is increase in size and importance of a country's financial sector relative to its overall economy. And in recent years, financialization results in a massive increase in the amount and diversity of financial instruments being traded, that is a phenomenon known as securitization. These are we can segregate financial development index pyramid into two parts, that is financial institutions and financial market, both having indicated by these indicators of depth, access, and efficacy. If we go through the indicators for this depth, access, and efficacy, for depth, the indicators are private sector to credit, pension fund access to GDP, mutual fund access to GDP, insurance premium, life insurance and non-life to GDP. For indicators of access, we can take bank branches per 1 lakh adults, ATMs per 1 lakh adults. For efficacy, we can take net interest margin, lending deposit spreads, return on asset or return on equity. In case of financial markets, the indicators for depth are stock traded to GDP, stock market capitalization to GDP. For asset, it is percentage of market capitalization outside of top 10 largest companies. And for efficacy, we can take stock market turnover ratio. Coming to financial development in case of India, the financial development index that is in case of India, we can see India has shown an improvement from the level of 0.59 in 2020. In 2020, it has gone up to 0.59 from a level of 0.12 in 1986 in the backdrop of various economical and financial reforms that is taken by India. If we compare this with the world's average, we are not within top 20 countries. These are the financial development index for the top 20 countries globally. This is the source is IMF. Anyone can refer it. The development of India as compared to this is due to mainly lack of access of financial institutions, market, depth of financial institution, efficacy of financial institution. So we need to put some focus on this. These are the various financial products for improving financialization. For gold specifically, we can go for gold leasing, gold swaps, gold ETFs, equities, and all. In addition to all these existing financial instruments. Now, coming to the benefits. Why we need financialization? How its benefit? So basically, financialization leads to more efficient allocation of money and risk mitigation across the economy. It increases the participation through various financial intermediaries. It leads to risk diversification. And financial markets like future contract or bonds or equities and currencies, interest rate, etc. The leverage on safer asset like gold, gold created out of a tangible value, out of an ideal physical asset like gold. So it is for gold, which is the least, I think, financialized in the country in comparison to other assets. The other benefit is job creation in the industry. Financialization also provides investors with greater liquidity, allowing them to buy and sell assets more easily. So in a nutshell, it will increase liquidity, it will increase greater access to capital, and lead to diversification of investment portfolio, better risk management, and all. So these are the benefits of financialization. Now, coming to gold, why we need this financialization of commodities? Financialization of commodity refers to the increasing role of financial markets and financial instruments in pricing and trading of commodities such as food, energy, metals, and agriculture. The impact of financialization on commodity market has been debated, with some arguing that it has increased price volatility at times and reduced market efficacy. However, some has argued that it has increased liquidity and risk management opportunity. So we have to think on this. From now, I will like to invite Charu to take further.
Good morning, everyone. So we have seen now that how the commodity financialization has been there, and across the commodities, including oil, gold, maize, and other commodities also. We'd like to now focus more on the gold as a financial instrument. So these are the attributes which we can think gold has to be qualify as a financial instrument. So we'll go one by one. Liquidity. So the gold is traded across the world's exchange, and the data which will subsequently present that there has been a substantial turnover in the world gold market through futures, options, and OTC trades. Gold is a easily transferable instrument. Gold is also regulated by the various regulators across the world. Apart from that, gold has a risk hedging properties which is used into the inflation during the period of inflation. On the basis of return, what we feel that gold doesn't have actual return as this. However, the mark to market or the price gains can be seen as a return. Standardization is one component where the gold is one of the best metal which can be standardized, and it is traded across the world. Sorry. Durability, if we see the gold has a lot of store value, and it is a durable metal, so that adds to the characteristics of gold. And divisibility is that gold can be reduced to a small 1 gram coin also. That is the one of the attribute of the gold that makes the gold as a financial instrument. So these are the gold products available in the market. We categorize it into physical and digital. Physical assets mainly includes jewelry, gold bars, gold swap deposits, loans, and digital includes digital gold ETFs, then gold mutual funds, gold accumulation plan. This can be also physical and digital also. Sovereign gold bonds, gold futures, and options. These are some of the products which IIBX has proposed to at the GIFT City. We will not go into the details of it, but just a sample we have placed there. So I would like to call my colleague to explain his study on the gold performance using financial market variables.
Good morning, everyone. So I thought this stage I will share one of my study, which has been published internationally on Elsevier platform. Authors were me, Naveen Kumar, and Aniket Ranjan. So it can be typed on Google, and you will get that study. So what we tried to did, and why it is correlated or related to the presentation we are making. The presentation is about financialization of gold. And during the proceeding yesterday and in the morning, what we have come to know about, there are lots of impediment in achieving the goal of financialization. And the limitation is not just local, national, there are international issues also involved. The coordination is not to the desired level to reach those goals where we have the financialization goal reaching all the countries which have some gold, some stock of gold, so that all benefit from that drive, financialization drive. So in this paper, we tried to develop this relationship between the gold and financial sector, financial market basically. So what we did is this, that we actually tried to see the performance of gold as a financial asset during different phases of financial cycle. So we went very deep into the exercise where we see what kind of liquidity is impacting the gold performance, what kind of volatility is impacting, how diversification is related to gold. So we tried to examine all of these, and our basic hypothesis was to test the diversifying attributes. So when we saw like how for US, we had these results, the empirical results, and I'll just explain them. So what we did is that we had an unobserved component model that we exercised for this, and the results showed that when US dollar and gold, when their performance, relative performance is seen, and I think it was was referred by David also today, that when dollar is doing good, gold is not doing. So it become a natural diversifying asset. So it is definitely for a central bank, and I don't know what role it plays for our domestic gold purchasers, importers, and other stakeholders. So they may look into this aspect and integrate with the global trend. And stock, like stock was a weak, when we see in the model, it's a weak correlated variable. And then safe haven. For safe haven, if we see, the VIX is the variable here, and it's doing very good. So when there's a lot of volatility, geopolitical volatility, some event is happening, earthquake is happening, just like what happened in Turkey, that must have some impact on gold price. I presume this, and market participant can confirm that something related to that happened or not that day. So we saw that in our empirics. And so basically we saw that it is a diversifying asset and it is a risk hedge for not only central banks but for all stakeholders in gold. So it can be noted down as one of the things. And also we saw during the global financial crisis and COVID-19, it showed all its basic attributes. They were all in front of us. So these are some of the findings in our study. The study is available on SSRN network. You just write Aniket Ranjan Naveen Kumar, you will get that study. So now I will ask Charu to carry on from here.
So as I said previously that the gold trading volume, you can see it's almost around 131.62 billion per day. So I will not go into much due to paucity of time. These are some of the turnovers and ETF flow region. So I'll go to the case study of financialization of gold by Turkey. So these are some of the steps Turkey has taken to financialize the gold, which includes the reserve option mechanism, where the CBRT, the Turkish Central Bank, has given the banks to have option to keep their reserve into the gold and foreign exchange up to a certain part of the their reserve requirement. So basically they can hold their gold, FX and Turkish lira in some proportionate amount. Then they have started accepting gold as a collateral for the liquidity window for the repo and reverse repo operations. They have also integrated the exchange and started providing back gold domestically through Borsa Istanbul. They have developed a spot gold platform within the CBRT and BEAST. They have allowed the banks to convert into FX, conversion of FX gold and FX and gold participation accounts into again Turkish lira time deposits. They have launched some of the treasury gold backed bonds and sukuks, which are the Islamic Sharia compliant instruments, and they have started gold monetizations through the gold jewelers. So these are the some of the benefits for the participants, including central bank, where they have realized that the volatility into Turkish lira has reduced substantially and added the country's gold reserve. Commercial banks also were able to bring out the golds which were they called as under the mattress, and they were able to financialize the gold and increase the gold's part into the economy. Gold market also got help into this. The increase in gold demand has been substantial. After that, gold market infrastructure has improved, efficiency has improved, and liquidity also has improved. So these are some of the emerging lessons from Turkey's case, that the development of necessary infrastructure is very much required for gold financialization. And if we go through the various reports and committees, this has been highlighted by the Niti Aayog committee also. They have allowed bank also to be a part of a financialization of gold. Banks also encourage the refiners and jewelers to set up a network to collect the gold back from the domestic. They have developed world-class facilities for the determination of purity, and this has resulted into the quality of the gold, improvement in the quality of the Turkish jewelry. This is a present structure where the Indian market works. I will not go into the details. These are some of the challenges faced by our gold markets in India, which include lack of quality assurance, limited international demand, unorganized bullion ecosystem, then a limited recycling of gold, limited focus on investments in non-jewelry products, limited influence on the process of setting gold prices, import of dore from non-OECD compliance. So the main part of this, how to go ahead with the financialization of gold in India. These are some of the generic points where there can be common points across each other. So first one is the integrating existing gold above the ground into the financial system, which can be done by developing products like we have launched gold monetization scheme, gold loan scheme, gold metal schemes, then various derivative instruments also we can be developed. Next is the encouraging investment into gold linked financial products and not the physical gold. Again, the same, the products which are available in the market can be promoted. There can be a development of market robust infrastructure for that, which includes the various setting of regulations, then the transparency of the pricing, technology use. So these basically all are 7 points where which we can see as a broader roadmap for the financialization of gold. So these are some steps which the government has taken since 2014. Gold monetization scheme, where includes gold deposit. This was the previous scheme launched in 1999. However, it is revamped, and again gold deposits from the public were accepted. Then gold monetization scheme, same, and where the gold metal loans were given by the commercial banks through the gold deposit which they have raised from the public to the market participants. So another is sovereign gold bond scheme, Indian gold coin, hallmarking and assaying, Indian goods delivery standard, which was developed by the BIS. Then the bullion exchange at GIFT, and EGR launched by the guidelines under the guidelines of SEBI. There may be some small issues with this, but at least there has been some start, and the market participant along with the regulators, this can be taken ahead. So I would like to go to our last slide where the way ahead, and these are some of the points which may be in the kind of partial compliance or maybe in the fully complied also. Which are mostly like gold policy. So India doesn't have a kind of a very structured gold policy. Niti Aayog report has tried to bring out something on that, but nothing has come out in very elaborative into that. Gold Board of India, again yesterday when there was a discussion, there can be a SRO which will be a kind of self-regulatory organization. That can be a Gold Board of India. Bullion Exchange of India already in the GIFT cities, and it is already there, but spot exchange is one of the things that can be seen. Gold Domestic Council is one thing where there is a lot of trade bodies which are working as a separately in silos. So Gold Domestic Council can be a point where there is a one organization which will be representing. I think GJC is one of the part of that, but that has not come up in the market very with the publicity that there is such council which is kind of available in the market. Gold saving account is one thing that can be done where we keep deposit gold, or even we can deposit cash which will be converted into equivalent gold and will get interest on that, while again withdrawal that can be taken out in either cash or gold as per the customer's requirement. Gold mining, as we have been hearing, there is a very less capacity available. The government and other participants need to give more emphasis to this so that we can have our self-efficient domestic sourcing also. So thank you. This is.
So I think thank you very much. It was actually very comprehensive from the way, and your study in particular, we will see how we could probably download and more people in the globe reads it. We have a gold hub, we'll try and do that. A very interesting study you had. So thank you first of all very much, and we are actually going to discuss the role of banks and exchanges in financialization of gold, taking on from what you have left. But before that, are there any last words, a few summary words which you would like to speak? If there are one or two questions, we'll take it, but we have to move to the panel discussion. So that's the way I'll put it. But over to you for any summary.
The whole purpose of coming here and coming with this presentation is to start off, if it's already started, then to increase the pace of financialization of gold. It's an productive asset, but we take it with a mindset that it is not productive. that mindset has to change. I think this is my main message to all of participants, that please change your mindset and change the scenario.
Thank you very
That's
much.
very encouraging to hear from, even as a personal viewpoint from the Reserve Bank of India.
Yeah, and,
I just want to add something.
definitely there has been, I would say, if we could collect 1 gram for every meeting we have had on financialization of gold, by now we would have had 200 tons or something like that. But having said that, we are coming closer to a shape and form, and particularly now, I again don't want to say with IIBX and the gold spot exchange, there are now regulated entities which can actually take care of the physical part of the gold. The biggest issue we have always said is, when you say gold monetization, the first thing is somebody has to take care of the physical part. That has always been a challenge, because the physical part, you never know where the gold came from, whether it is really true gold, etc. Now with the exchanges in place and SEBI also, hopefully the domestic spot exchange will come. It just opens up the vistas for us. I think therefore we are at a crucial point. I am absolutely sure that RBI's objectives, the government's objectives through RBI of financialization of gold, will probably get a fillip with this announcements. So, Arvind.
And it's just great that we are now having this dialogue. So we have a sense of now a little bit of the thinking that's going on, and you have a sense of from the perspective of the industry, IGPC, and so on. So it would be fantastic to continue the dialogue on an ongoing basis.
In a lighter vein, I can only say, do not ask for opinions from various people. I think you will require a separate RBI building to hold all the papers. Okay? But having said that, I think a forum like, an institution like IGPC could probably give you one summary of all that has been discussed, what is possible, some not possible, etc. I think that will be a good start.
Yeah, I have already discussed with Sahai sir, and we are open to any collaboration.
Thank you. Thank you very much. And yes.
So to add to a point related to Turkey, it was study done by WCCBRT, where they mentioned that it has helped, financialization of gold has led to reduction in the volatility of the exchange. But look at it, it's actually not led to a volatility of the exchange, their exchange rate. What it has rather had a direct impact, reduce the volatility on the inflation-adjusted savings. And because it had direct impact on the inflation-adjusted savings, their consumption did not fall to an extent of lowering the growth of the Turkish economy. So Turkey still manages to continue to grow despite all the geopolitical tensions and the economic, macroeconomic. The consumption over there, not just the gold consumption, the consumption is what is holding up the Turkey. And that's primarily because the savings that has been driven by gold. So it has, at the macro level, the exchange volatility couldn't be controlled. But the savings, which becomes a core, which becomes a pillar for the country, that has become stronger.
Yeah, because the microstructure.
And something that I want to further add is, this is a study which has not been empirically tested yet and has a greater scope for working on it.
Yeah, so I
Both
could,
India and Turkey.
yeah, I could personally interact with the person who spearheaded this movement in Turkey. Now,
Yeah, this is
that
Kurti.
person, yeah,
Kurti.
yeah.
She was
So,
in the central bank.
yeah,
at that
so I had an interaction with her, and she narrated the whole story, what she could do there.
Yes.
And that was the trigger point actually to work on this.
Yeah.
idea.
In fact, we had taken an advisory board, including people from IIM about 5 years ago, to Turkey, and we met the central bank there. We met lots of people, and this was just before 2015. So I think there's a lot of body of knowledge is high. We will absolutely support you through IGPC and wherever it is required directly also. But thank you very much for coming over and making this presentation. I think it is a good start, and I think the time has come now where we could see some concrete action. So thank you very much.